I'm buying gold and I'm buying solar. Today I'm going to show you why. Hey, Ross Givens here, a trader of more than 20 years. And every Tuesday I do this segment called 2 Trades in 2 Minutes, where I try to find you 2 low-risk, high-probability trades that you can take right now. And today is no exception. So let's just go ahead and dive right in. Now, gold has been on an historic run, running from $2,600 at the start of the year to over $4,100 an ounce. And I think it's a great time to add on here. Now, the typical way to trade gold is with the ETF GLD. I picked up some shares yesterday here at about 375. It's within 1% or so of where I got it. And the reason is the news that took place over the weekend. So if you missed it, Trump announced plans to issue a $2,000 essentially stimulus check, which he's calling a dividend, out of the tariff revenue the U.S. government has collected since he took office. And so while this is great for the lower and middle class and will inject some capital into the market, it is also extremely inflationary. The entire reason gold has been ripping all year is because the government has proven they will never quit spending and they will never quit borrowing and printing money. Elon Musk and the Doge department was the best chance we were ever going to have to cut the waste, fraud, and abuse, and that entire project failed within 3 months, concluding with $5 trillion raise to the U.S. debt ceiling. And so the writing is on the wall. Investors globally see what's happening, and they are flooding to physical currencies like gold and silver as the dollar slowly collapses and is likely to continue doing so, just like it has for the last 100 years. But these $2,000 checks, which are expected to go to the everyone but the top 10% of earners in the U.S., is going to pump a massive amount of capital into the market to the people that tend to spend it the fastest. And of course, as we know, when you pump more dollars into the system, when there's more money chasing the same amount of goods and services, that of course demands higher prices for those goods and services, and that is essentially inflation. Inflation drives the price of everything, and the go-to inflation trade is gold. And if you needed any more proof that this was the case, look at what happened within hours of Trump placing this tweet. In fact, the second the gold futures market opened on Sunday evening, gold shot up almost instantly by roughly $100 an ounce and has continued to push up overnight on Tuesday. So I like gold here, and this is how I'm going to play it. In fact, let me get our timer set up. I think I'm 1 for 10 in getting this done under 2 minutes, but maybe today is the day. So let's go ahead and kick off. All right, so here's the trading gold. Now, again, you can use GLD. These are daily bars here. And you can see after the big run-up we had in September, it got a little overcooked, pulled back. This is totally natural. It's what we want to see, is that it come down, kind of absorb the sellers, compress, tighten up, clear resistance right here at about 371, and then, of course, popped over on Monday when it opened up, and is set to open up a little bit higher on Tuesday. So I think you can buy GLD. In fact, I did buy a little bit in this account yesterday. On Monday, I also added more in my 401k account here in GLD. And if you bought it, it's set to open at about 380. You put a stop beneath the low to risk roughly 5% on a continuation in gold. Now, if you want a little bit more juice to this thing, there is a 2x leveraged ETF. The ticker is UGL. All this means is that give or take a percent here and there, this is going to move double what gold does. So if the price of an ounce of gold goes up 20%, this should go up roughly 40, and vice versa on the downside. So UGL set to open around $52. I think you could buy it here. I would be putting a stop loss at the low, because this is the near-term swing low. It should not be taken out, and that's going to give you a risk of roughly about 9.5%. And of course, if gold continues higher, which we believe it will, and takes out new highs, you should be up 14, 15+% and riding the rally higher. Okay, so that's number one, is gold. And the second, the other stock I want to look at is SolarEdge, ticker SEDG. Now, it's had a couple of big days here recently. You see the big 28% surge off the lows back last Wednesday, tacked another 13% on Monday. This thing is ripping, and as I back out, the chart gets better and better, okay? So As we scroll out here, one of the things we look for as a stock coming off the lows is this consolidating rounded bottom. Definitely not going to make this thing in 2 minutes. We're already out of time, but I need to cover this trade for you, okay? So let's look at what's happening. Now, if we go to a weekly chart, and I'm very big on stage analysis, so stocks kind of tend to move in these stages where you get these big stage ones, where the stock is just consolidating. You get big stage 2 runs, which is the markup phase. Stage 3 is a distribution phase where you see the institutions getting out, and then you get the markdown phase, which is phase 4, as the stock capitulates lower. It then goes back into stage 1 and repeats the process all over again. And that's what I believe we have happening here in SolarEdge. Here on the weekly chart, you see it had a big, nasty downturn in 23 and 24. Stock went from 350 to 7, massively collapsed. And that is not good. At no point in there should you have been buying that stock. But if this thing's going to turn around, boy, it's great to buy it at 40 or 50 if it's going to go back to 450. And down in here, and you can draw it a couple of different ways. You might kind of look at it like this now, but you see that big rounded bottom. Let me put this in logarithmic scale so it's easier to see. And you can see how it comes in and then slowly begins to compress and tighten and shallow up. One little, we call this like a shakeout move last week, and then cleanly breaking through the highs. You can see that it has not been able to get over this kind of $41, $42 area, blows through it with reckless abandon yesterday, and is pushing higher. And if you zoom into a daily chart, you can see this a little bit closer. It's not perfect, like I would love to see it come up in here, but it's really, really clean, easy to spot resistance, and it blew through it on above average volume right in here. And this is likely the start of a much bigger move in a stage 2 uptrend, which could push this thing up 70, 100. Let me get it at a log scale. Up into 80, 100, potentially up to $200, $300 a share. And so if we can do this with a sub 10% risk, it's a great way to do it. Now, this is often referred to as an episodic pivot. It's a little bit different than a breakout, although it happens to be taking place at a breakout point. But it's some big piece of news or some big surge of buying rips this stock that has been fairly quiet for the last several weeks or months. It's often the beginning of a much bigger move higher. And so here's how I'd trade SolarEdge. Yesterday's big move, 13.5%, should trigger something big. If this is what we think, a big move on volume, it should not take out the low of that day. In fact, if you go back and look at the other occasions this has happened, here's a big move up here. This big 17% day on above average volume never took out that low. It was the start of a much bigger move higher. We had another one last week, shot up 28% in a day. Big volume, that was the start of something, never came anywhere near the low. And so we got another one here on Monday, 13% above average volume, again, should not take out this low. So what that means is the best place to put your stop loss is below the low of yesterday. With an episodic pivot, ideally, you want your stop at the low of that day. That's all you should need to risk. The odds are in your favor. So it's set to open up here at about 45.15. Stop loss at the low gets you about a 9% risk. I'd put my stop right there at $41 per share. And again, looking for the start of a big new stage 2 rally higher. So that's my 2 trades in 2 minutes. One, GLD, or the double leverage long, which is UGL. Second, SolarEdge, SEDG. And one last little piece on the solar thing. The reason I'm focusing on solar is that's where all the money is going. We've seen a big boom in nuclear in the second half of 2025 as that's fueling the AI rally. Those stocks, a lot of them got overcooked, went too far, too fast, and we can see clear as day that the money is flowing into solar energy, solar energy, solar energy, solar energy. They are telling us where they're putting their dollars. And if you look at the ETF, TAN, look at this thing. You would have no idea there was a dip and a pullback last week. This thing just kept peppering new highs and is doing so again today. So like the solar sector, SEDG, SolarEdge, my play there, and then obviously gold. Now, if you like this, do me a favor, hit the subscribe button down there in the corner. I put these out every Tuesday, sharing my 2 favorite trades of the week, in addition to other content regarding stocks and strategies and basically anything I believe can make you money.